Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. We are tracking the action in the ETF market. Year to date, net inflows are $678 billion, according to VettaFi, putting us on track for another record year. Joining me now to discuss the ETF market is Tom Staudt, ARK Investment Management President and COO. Tom, thank you for joining us.
Great to see you, Frank. Thanks for having me.
All right. So looking at the ETF action this week, what have you been seeing? Obviously, mega cap tech earnings are really dominating the action today as we're doing this taping, and there's been a lot of anticipation and build up for them as well.
I think it's an interesting market because you've seen an environment recently where tech has dominated the headlines, but it's also really a large cap versus small cap story, certainly as the market's watching the Fed and every word that comes out of Chair Powell's mouth. But I think the story that's maybe a little bit underappreciated is innovation relative to just tech. You look at the S&P versus the equal weight S&P. You look at the QQQ relative to the S&P, and you look at something like ARK Innovation significantly outperforming this year, including in this recent period. It's really captured the market's imagination.
Speaking of, according to VettaFi data, two of the top ETFs this week, the IBIT, which is a Bitcoin ETF, and also the ETHA, which is an Ethereum ETF. Does that signify investor sentiment in any way to you, or do those two just happen to be the biggest inflow gainers?
Well, I think we've seen the story really be driven by the geopolitical environment, particularly in the United States, along with some of the earnings. We've seen Robinhood, we've seen Coinbase, we've seen the success of Circle since its IPO this year. The market's focused on this, but they're looking at playing it as well with the spot crypto ETFs. I think for so long, people were waiting to see if Ethereum was going to catch up with some of the positive flows that the Bitcoin ETFs have had, and we're finally starting to see that. I think it's really healthy for the market, Frank, because it's broadening out. It's not just the Bitcoin story, and while the largest of the funds capture the headlines, when you look at the flows down for the year, even beyond IBIT into the other Bitcoin ETFs, including ARKB, including Fidelity's offering, these are strong across the board. So I think that it certainly speaks to a much larger story than just a couple ETFs.
You know, to your point, investors looking for innovation in their investments. We've highlighted this quite a bit on Worldwide Exchange. Just kind of the upside moves when it comes to the ARK Innovation ETF, the ARKK. Looking over the last month, it's up over 8.5%. What kind of inflows have you seen into that?
You know, inflows are still shaking out as the market has digested coming off of a period where the innovation faced headwinds for portions of last year. But what we've seen is strengthening demand, strengthening fundamentals. You know, and I compare it to actually a different ETF that we have, ARKW, from the next generation, because that fund is primarily AI and also crypto. And you look at both the strong performance significantly against either tech, against growth, and the flows as well. And I think it speaks to the fact that the market is widening out to become a stock picker's market. It's not just a large cap. It's not just tech generically. It's not just even, frankly, innovation generically. And when I say that, the genomics biotech space in general continues to face some headwinds and hasn't had the lift from either interest rates or some of the regulatory changes going in. But an ARKW that has technology, AI, and crypto has had fantastic tailwinds and performance, really not just short term, but longer term. And I think that speaks to active management is going to have an opportunity here. Stock pickers are going to have an opportunity here, and the flows and the performance is recognizing that.
All right, so with that in mind, again, for the Mag 7 reporting their earnings this week, can you give us an ETF that you see as a great way to play the current market?
I think the current market right now, I would stay with ARKW, the ARK's Next Generation Internet ETF. It has had strong performance, yes, certainly buoyed by the Bitcoin boost, the Robinhood and Coinbase, but there's a lot of opportunity here as Tesla comes through, some of the volatility that it's faced, and there's a lot more as the large cap tech earnings have shown this week, as a number of these continue to beat, that the AI story is still in early innings. I think some people get worried about the fact that they hear a lot of the headlines, The same is probably true in the crypto Bitcoin space. But when you think about the penetration, when you think about the geopolitical, when you think about the fundamental changes, so that there are real, actual growth from coming out of the government, of the political situation, this story still has a lot of legs left.
All right, can you kind of just walk us through it really quick, Tom? You said there's a number of themes that investors should be looking to play right now. What's the theme that the ARKW helps you play?
It's really AI and crypto largely, and again, this takes a couple different forms. We've seen the Robinhood announcements this year. Robinhood's obviously been a fantastic stock, and that's given an opportunity for stock pickers to move around. That certainly touches on the crypto side. We saw their continued announcements on building out the tokenization, the crypto, but also the geographic expansion. But I think you also look at something like Roblox. You look at where AI is infusing, continuing this developing story of the convergence between artificial intelligence, blockchain, the tech names that are separating themselves from just being large cap growth companies with declining growth rates, and those innovators that are really taking market share and separating themselves. And we've heard that in all of the earnings calls this week. AI is a topic, not in the way that we heard generically, perhaps even a couple of quarters ago, but really about the specifics and picking winners and losers here, against one another. And I think that's really, again, positive, where the market's getting back to the fundamentals. It's starting to look at that long-term story, but it's also looking at the convergences of technologies that they had been separating up until this point in the conversation.
So out of your suite of ETFs, that's why you think the ARKW is the best one?
I think that's really playing the story right now. I think the hidden gem here, honestly, could be ARKG, the genomic space. If you look at biotech in general, certainly biotech tends to be a little bit smaller. It certainly has been more interest rate sensitive. Even the broad-based biotech indices have really struggled here over the last year and a half. But as we look at coming out of the Fed meeting this week, and as we look forward for the rest of the year into next year, it certainly continues to look like we're going to be into eventually a rate cutting environment. These are duration assets. They're certainly rate sensitive, but there are also on the horizon the catalysts for biotech that we've seen been real tailwinds for AI and for crypto. And I think as the Trump administration and around the world, as we get some of these same catalytic breakthroughs in biotech, these names have not run. These are not looking at the valuations that you're seeing in some of the stronger parts of the market, but their fundamental story is really continuing to build. We've seen real breakthroughs. We're seeing real progress with the insurance companies and reimbursement. And I think that's probably the most underappreciated part of the market. So if an investor is looking to the part of the market that has not had this run, where they have not missed, but has real tailwinds coming, I would look at the genomic space, ARKG, that ARK offers. If they're looking to play this theme right now that they're seeing in earnings week, and that is really being talked to as we see a number of the large cap tech companies put forward optimistic projections that are beating, I certainly think ARKW, which doesn't have the genomics exposure, but really focuses on AI and crypto, is an excellent place to capture what the market's looking at right now.
All right, Tom Staudt, ARK Investment Management President and COO. Thank you for your picks and for your insight. Really appreciate your time as well. And thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Have a great day.